Yo, guys, it is the 14th of July, halfway through the month. Just got back from Tampa. I got Scotty Bear back on by popular demand. What's up, Mr. Bear?
How you doing this morning?
I'm trying to get things done. It's like one of those mornings where you try and start one thing and something else happens. Okay, then you get back to your thing and something else happens. You're like, well, I'm dumping that damn thing, going another thing, can't get that one done. And it all centered around a damn tortoise that got loose that my kid has. And when the neighbors walking and they took it and walked a mile and a half down the road to their house carrying a damn tortoise. I'm sure they look really, really funny. And then, my wife, yeah, it was just, it's way more complicated than it needed to be over stupid ass tortoise. So you?
Me just, watching the rise and just, I don't know, rates are all over the place.
They are, and we'll definitely get into that. But one of the things that I think people need to wrap their head around is even though rates are all over the place, I'll share this screen, man. Scotty shot me this Market Watch article, and it says there's no data out there that shows the prices are crashing. The U.S. housing market is very, very strong. The U.S. house market is very, very resilient. What I find is really interesting about the first line here. It says the housing market may feel out of whack to homebuyers coping with fast rising home prices and 7% mortgage rates, but like it or not, the housing market is in the pink. I've heard in the pink before, but I've never heard it referenced in the housing market. So I don't know what they're getting at with that one, but that's a very, very interesting way to put it. But what I found really, really interesting, they're talking about fast rising home prices and 7% mortgage rates. Guys, this is Market Watch. Just came out. They're talking about 7% rates for people buying houses to live in. And it's amazing how many people in the investor space are saying, how come I can't get in the sixes without paying a bunch of money? You can't even get in the sevens. I mean, in the sixes hardly as a homeowner buying a house to live in with 20% down and 780 credit score. So wrap your heads around it, people. Let's get in the fact that we understand where rates are going. In fact, here's another article that's, now before Scott even gets going, because I probably got all kinds of things working in his head. Take a look at this one. This one just came out as well. This is Market Watch again. And it's actually linked in the same article I just referenced. There's an expectation of 8% in the next 12 months from, this is a survey done by the New York Fed. So I've been saying it. We've been talking about it. I've been showing the charts about that's where we're going. We are going to see those higher interest rates, and there's nothing we can do to stop it. What you need to do is get your head wrapped around the fact that it's still possible to make a significant investment that's going to pay significant returns, even though interest rates are going to 8%. Any thoughts on that, Scotty?
Yeah, I mean, regardless of where they're going, there's nothing out there that you can watch, see, read, whatever it may be, whatever your sources are feeding you information out there, that should be leading anyone to think that we're here in the near future going to any better place than where we are now. It's like anything, you catch things. We had with CPI, PPI, we had a couple of good back-to-back days, and then after a couple good days, you have one of the Fed chairs come out and say, we're not done. Don't let these things fool you that we're not done at work and inflation's still too high. And now that, I said that yesterday afternoon to some people, late locks that I did. I just said, while we've had a couple good days and who knows, maybe tomorrow brings something, maybe even better. I see this thing pop up and I read it and I'm thinking to myself, it's at the close of the day. It's not going to hit the market today. We're going to fall backwards. And sure enough, this morning, we're down 50 basis points. We're back to where we were probably at the beginning of the week. It's frustrating. All I could say, and conversations with bars, while none of us know what tomorrow brings, I can tell you when we have a few good days in a row, don't get greedy. Just pull the trigger, be happy, lock, don't look back, just like trading stocks. You sell something, you sold it for whatever. Don't look to see what it's trading in the market tomorrow. You don't own it anymore. Well, if you lock your loan,
don't look back and lament.
Yeah, you lock your loan. I just tell everyone you're protected for rates now if they continue to go up, which is the more likely. Is there a day in there that things might pull back a little bit? Absolutely, but don't look your locks, just don't look back. Move forward, look forward to the next deal, and take it that way.
Yep. Yesterday's gone. Today is now. Tomorrow has yet to be built. So start building it right. And the way it's to build that and get your mind right. A couple of things more things I'm share before we get to the actual mortgage bonds. Let's look. I took the time to go through the history of interest rates back to 1971, which everybody knows I have this breakdown, and I updated all the way up to last month. And if you look, I averaged from January 2000 to up until 2008, January 2008, the average interest rate during that window, when you and I, Scotty, were doing most of our work before the crash hit, 6.48%. So basically 6.5% was the average rate sold during that window of time prior to the crash for the average person buying a house to live in. So where we're at today, was it bankrate.com is showing 7.1 for the average 30-year fixed. We just had Market Watch saying the same thing. Potentially, they know what's going to go up. The best we might see, in my opinion, might be that 6.5%. We're only 0.5% away from that. So for you to lament something, and the only benefit we might see is 0.5%, that's crazy for a person to even think that. Another place people should go is Mortgage News Daily. When you get there, /MBS, you got to check the MBS right here. You'll see, if you go to all, click on that, you'll see the trend of interest rates that they're going to cover from back to 2013, basically. It's trending negative. This is what it's saying. It's trending negative. It shows you all this negative direction. It's a small snapshot of what I show you in great detail. When you look at these averages, it's going up. It's pointing exactly the way that we've been talking about it pointing. So you've got that as another reference. So you can say MBS prices are significantly weaker so far today. This strong downward movement in MBS will most likely result in higher mortgage rates, period. So keep wrapping your head around that. When these markets go down, rates go up. And so let me share with you where we're at in the actual MBSs right now, which I've got to find that particular screen since I have a way of moving screens around like crazy here. Here we go. Got that one. So this here, getting back into what I look at and Scotty looks at to see where rates are trending based upon the actual trades of the market, like that one I just showed you. In fact, I'll zoom out a bit here from Mortgage News Daily. You can see the same trend line, same negative movement, but you can see where we have seen big downward sweeps, then upward rises. It's going to hit those averages, those moving averages, and to come off of that. We're going to be trading in this wide range here, still heading downward. With that downward movement, we're going to see that 8% over time. I don't know how long it might take us towards the end of the year. Probably somewhere in here, we're going to see that 8%. Look at that. If we trend it all the way down, we're going to get right down into here over towards probably the first part of next year, just following this trend. That gets us here where we were pricing over 8% for investment properties. And if we get down in here further, like later next year, as they're talking with the New York Fed survey, we could easily see the 8% for the owner occupied late next year. I'm not saying it's going to happen. This is me not saying, I'm not going to tell you this in absolute certainty because the market could shift. We've seen crazier stuff happen. But what you need to do is have a deal in place. If you're talking about a refinance or a cash out refi, have your file open and ready in our system. So if the market does achieve a blip in a day that makes sense to you, that you would accept as a rate, so Scotty can lock it. If you're the individual, and speaking to a lot of you out there right now, it's not me. I'm going to kind of bust your balls a bit, but I'm not trying to be a prick about it. I'm just trying to say, to protect yourself, if you're calling or emailing Scotty every single day, say, how's the rates now? How's the rates now? How's the rates now? To decide whether or not you start moving forward on a loan at all, you're just putting yourself at risk to miss the opportunity to lock in a rate that you would accept. Start the deal, get your credit pulled, and sit and wait. If you want to ask Scotty. He'll acquiesce. He will do that. But if you haven't done to that extent, had even your credit pulled, you're just playing with yourself, jerking off on something of zero value. You're not going to get where you need to get. Move forward as if it's closing. Make your pause. Work with Scotty to get that rate you want. Let him pull the trigger then. If you are waiting to get the rate you want to build the file, you're going to miss it. The market moves too freaking fast. You're going to miss it. And then you're going to bitch because Scotty couldn't get you the rate that he said he would get you. It's just the way it is. So you need to do your part. We'll always do our part. Scotty has always done what Scotty's supposed to do. He's never failed in that. I need you guys to step up so you can make him a little bit more successful at the role. What do you got for me, Scotty? Anything else?
No, and just probably the harder part is, you know, here in Arizona, everything based off the East Coast for the most part. When news hits in the morning, our rates for the most part don't come up till 7:30, 8 o'clock in the morning. So whatever is happening, whatever is on the agenda for news happening in regards to inflation, jobs reports, whatever it may be, that news hits every morning and it's before we even see rates. So rest assured, if you're playing it and you're waiting for the next day to see what the news is, there's no jumping back to what it was the day before. We're at the mercy and we sit back and wait and see how it truly affects the market. So, and like Aaron was just saying, you know, if you're looking for that, you know, whatever window that you're looking for, you have to be, you know, if you're on the sidelines, you need to be suited up. You need your app up in the system. We need something to lock. If you're waiting for that rate and you're like, wow, this is the rate I've been looking for, and you have nothing going, chances are you've missed that, you know, opportunity. The market's just there's too much volatility these days.
Extreme volatility. Be prepared for anything at any given time, guys. You want to play ball with us, you better suit up and get on the field too, is all I'm asking. That's it. I'm just asking you at least be suited up to go. I mean, you don't have to actually step on the field, but get your freaking uniform on. Let's move. Other quick thing, if you didn't see it, Sound of Freedom did hit. It was #1 in the box office its first weekend. Something about that, man. The people are getting it. They're understanding what's happening out there, and the mainstream is covering that crap up. It's actually comical to watch the dancing that they're doing to make it look like this is trumped up bullshit, when in reality it's an actual true story. They actually have news footage of him doing that specific rescue. Tim doing that rescue way back. CNN put it out years ago. I think it was like 2012 or 13, maybe, I don't know, 15, 16, something like that. But now they're trying to claim it never happened. It's craziness. Go to the website, aaron.chapman.com, scroll down to the donate. Let's continue to keep pushing value to those who are out there risking their lives to get these kids out of the hands of these sickos. Appreciate you, Scotty. And we'll circle back around on Tuesday, folks.
Take care.